Hello, good morning, good afternoon, or good evening, depending on whichever part of the world you are in. Welcome to this interesting panel webinar that we have today. There's been a lot of talk about open banking, and there's also a lot of discussion about its potential. So what we have today is an interesting discussion around unlocking that potential, and we would be having that with particular focus on the Middle East, but I would assume a lot of the discussion applies to people anywhere in any part of the world here. My name is Ram. I am the moderator for this discussion today. I'm a senior partner with Cedar and IBS Intelligence, the hosts of this event today. And this event is being brought to you by Fiorano. With me in this discussion today is, let me introduce my fellow panelists. I'll start with Richard. Richard Koch. Richard is a very senior policy lead at the OBIE, Open Banking Implementation Entity, based in UK. I guess Richard has been in the business of engaging with the industry panelists, for many years. He started all of way back in '99 when he was actually engaging with the industry bodies in. When he was with the Lloyd's Banking Group, and then I think he decided to switch sides and actually be part of those industry bodies, which he is now a senior policy lead at. And he's obviously been very active in evolving legislation and regulations over the last decade. And interestingly, Richard, I understand you were also head of policy at the UK Cards Association at some point.
Yes, that's right, yes.
Thank you. Thank you for being with us, Richard. Looking forward to a very interesting discussion with you. I have the second panelist, my friend David Jeggerson. David is the Executive Vice President at the National Bank of Fujairah in the UAE. But he dons many other hats as well. He is a board member at the Emirates Digital Wallet and at Webido. He's also an active mentor at the DIFC Fintech Hive, which it speaks for itself on his engagement with the industry. And before his current role, David was the co-founder and CEO at Noon Payments. I think if that's not enough, I guess the hats he has worn before across very interesting institutions, including Sopra, PayPal, IW Bank, and UBI Banker. I guess that speaks for itself. David, it's such an honor to have you with us. Thank you for being in this part of the panel today.
Thank you, Vinny.
May I also take the liberty of introducing my third panelist today, Biju Suresh Babu. He is the Managing Director for the Banking and Financial Services at Fiorano. Biju is based in London. I think the more important part of the description I want to share about him is he is an SME, a subject matter expert, on a number of areas, but the more important one for today's discussion, I would say, is an open banking, ISO 20022, platform banking models, and he has been doing a lot of talk. I mean, you could YouTube him, and he's been a regular speaker in various platforms, particularly in the space of API architectures, open ID standards, and ecosystems. I guess Biju has forewarned me that I'm not supposed to be indulging in too much of an intro, so I'll stop there, Biju, but I must confess the list is much longer. Thank you again for being with us, Biju.
Thank you, Ram. Thanks for having us. Nice to be here.
Thank you. Well, with us, that's not the only active members of today's panel and discussion. We would actually be having a very active collaboration with our audience today. So we would like to have your say and your views on a number of areas as well. So we would be, through the discussion today, be having a series of, should I say, polls or questions that I would, encourage you to actually actively use to share your thoughts. So why don't we start with one before I jump, into the discussion further. So I'm going to go with my first poll for the day. And is the poll visible for you, Biju? Yeah, okay. So the question is, what could be the most important benefit? Remember, we're talking about unlocking potential of open banking. So the question here is, what of these four could be the most important benefit from the rise of open banking? Is it improved customer experience? Is it greater financial inclusion? Is it better transparency? Or is it a wider range of financial products? Now, remember, I know a lot of you would love to have all of the above as an option. Unfortunately, that's not meant to be, because you have to choose the most important benefit from your perspective, right? I'll give 30 seconds more before we close this poll. And I could see there is some stiff competition between two of those four options there. All right. Okay, 10 seconds more and I'm closing the poll. All right. Let me share the results with you. And that's out there for us to see. More than 40% of the audience believe that the most important benefit is going to be a wide range of financial products. That doesn't mean we won't have better customer experience or greater financial inclusion or transparency for that matter, but simply says that we're going to have a large, wide range of financial products. That's some fodder for thought for our discussion today. And let me take that question, to seek some opening remarks from you there, Richard. And I do want to ask you, and someone who's actually been a senior policy expert, if you could set the tone for the discussion today with a high-level overview on open banking, what you believe are some key industry trends and how do you see them develop here?
Great. Thank you, Ram. So, I mean, open banking has come a long way since we commenced this in the UK in January 2008, when PSD2 came into effect and the rollout of open banking commenced. They're now in the UK more than 7 million customers and SMEs who are using open banking enabled products to manage their money better. As you know, open banking was sort of established to encourage competition. So I'm interested too in the findings from that poll to bring innovation into the financial services market and allow customers to share banking data with third parties to access a new range of innovative financial products. So very much what the audience saw as the primary rationale, the regulator saw as the primary rationale too, to enhance competition and provide bank customers with better financial services and more choice and lower prices. And actually, I think to the poll, ultimately, though that pressure leads to better customer experience too. So these things are quite interrelated. I think looking back at the rationale for the regulator doing that, I mean, over the last 2 decades, and I'm very familiar with this from my time back in retail banking, working with Lloyds, as Ram has said, businesses used data, complex pricing and other tools to slice and dice the data that they had on consumers. And this, what we termed yield management by businesses, is often, I think, or has often been experienced by those customers as price discrimination, upselling, reduced choice, lock-in, and that harms competitions. And I think definitely in the UK is turning people against markets. And open banking, I think, is the first serious attempt to use technology to redress this problem. It focuses on the demand side in banking and empowers consumers to give them, to enable them to compare banking products and switch more easily between them and have control over their financial data to help them access these new range of products and service. So it puts them in control of their financial lives. Now, the UK, I think, is widely recognized as a sort of global pioneer in this space. And it's very clear, as evidenced by the fact that I'm speaking to you today, that many other countries are looking very carefully at the UK experience as they develop their own models. So I think people want to replicate and actually learn from some of the issues that we've encountered here in the UK. And it is, of course, incredibly pleasing for me and my colleagues in the OBIE that those OBIE standards are very widely being adopted globally, because they are considered good enough for other people to follow. A lot of people are improving, I think, on from some of the lessons learned, and it's also very clear from a public policy perspective. That's my background. That that open banking is key to the development of a lot of digital economies. In the UK, the UK government's goal is very simple: to ensure that the UK maintains its position as the best place in the world to start and grow a fintech business. But there is competition from other markets, and I'm really interested in your region, where there's fierce competition between the different countries in your region to be that focus of fintech growth. And a recognition that has going to have such a significant effect on the economy as the whole and the livelihoods of citizens. I mean, we have been very successful comparatively in the UK. The UK has more fintech than the rest of Europe combined at the moment. But actually, there is a concern that we might fall behind, and therefore we're continuing in the OBIE to look at how we maintain the momentum of open banking and bring those competitive benefits. I think the other thing to recognize, and we might touch on this later, is that as well as introducing these new competitive services and allowing access to new participants, the great benefit of this is that it also encourages incumbents to work harder to retain customers. So it's pro-competitive in the sense that it actually improves the customer experience for those of us who are with conventional banks like Lloyd's. And it's very clear that in practice, this is that the advent of open banking is driving digital transformation across the financial services sector.
Brilliant.
So I think it has potential to drive an enormous change. It's going to be slow, but and gradual, but it is, I think, something that has an enormous potential to fundamentally change the way in which financial markets work.
And then we are here to talk about how do you unlock that potential. I think, thank you for that opening remarks, Richard. I'm taking away 3 C's from what you just said. Harnessing competition clearly is an area that you talked about. And you also said the cat amongst pigeon by inviting a challenge of number of fintechs in UK versus the rest of the world. So that's interesting. But if I was to take that discussion further, you talked about customers and customer lives being impacted by the digital economy and customer experience there. But what really was fascinating was the line you actually talked about of where you could take control of your financial lives, right? I think that's a very important takeaway, because it puts the power in the hands of people who actually are meant to have the power, right? Thank you for those very insightful remarks, and I am going to be jumping into the discussion with the panel. But before I did that, time for our next poll. I have the question posed there. So, what is the biggest driver that is driving the trends of open banking? Is it the fintech ecosystem, or is it an effective regulatory oversight? Is it the customer need for innovative products, or is it an increased willingness from customers to share personal information? I guess there are some interesting angles to those questions here. For example, you can't do away with any of them. I mean, you didn't have any one of them, then open banking cannot thrive. But then what's the most important driver, right? Well, I'll give another 10 seconds and we'll close the poll. Now, okay, and I'm closing it now. Let's see what the results are. Well, at least the audience have been consistent. With the first poll, as you can see, the overwhelming response is customer needs for innovative products. Our first poll said that, products is actually the name of the game. And then what we're seeing here is, a corollary to that, which is having customer needs for innovative products actually becoming, let's say, the biggest driver for the open banking trend. Well, with that, I will jump into some questions to our, fellow panelists here. And I'm actually going to take this question first to David, right? And now we're talking about financial products and we're talking about customers' need being, so very well defined there as a driver. How do you think, consumers, are they using open banking today even without knowing it, right? For example, if you take financial planning, right? Are we actually, today having open banking existing amongst us without necessarily being called in so many words?
Exactly. First of all, open banking is, just to clarify to everyone, it's a system that allows consumers to share their financial information with third-party providers through some kind of system called API. It's a bunch of functions that are being used by this party for creating new services that consumer will consume. And this allows this provider to offer financial services and products that are better tailored to consumer specific needs. So consumer may be using open banking without even realize it the majority of the time, as many financial planning tools and services rely on open banking to access to the consumer financial data. For example, budgeting apps that analyze the consumer spending habits and help them to save money, often use open banking to access transactional data from their bank account, for example. Or investment platform that offer personalized, tailored investment recommendation may also use open banking to access consumer financial data. Open banking, I would say, that also enable consumer in many ways to compare products, thanks to the fact that you can access to the data for thinking to which is the best product for you and how can switch between products and services in the market. So it's a way also, as Richard said before, is a kind of leveling the playing field for all the roles in the market, allowing the customer to have much more access to their data. So that is one of the main benefits that I see also in Europe. Not discussing who came first, Richard, between the UK and Europe. It is a kind of chicken and egg kind of situation that I would like to go through. But let's see the benefits of the market. For sure, UK now is leading worldwide in this kind of regulation, open banking. So we have to learn about this kind of market. Overall, I would say that open banking is really transforming the financial industry by making it easier for consumer to access a wider range of financial products and services. And while many consumers may be not completely aware as the technical detail how this kind of thing happen, they are likely benefiting from this kind of open banking every day through the convenient and personalized financial tool that can use it.
So I think there's a reference you're making to some of the new entrants and open banking, making this as a sort of a level playing field, if I borrow the phrase again, right? But talking about new entrants and talking about, engaging with them, right? I take this question back to you again, Richard. How do these financial institutions leverage the open banking platforms to improve services? And more importantly, collaborate with new entrants, right? I mean, if you can share some lessons learned from the UK perspective.
Well, that's an interesting question. So I mean, clearly banks historically have controlled that end-to-end value chain, and that's being disrupted by these new entrants. But I think despite those sort of challenges, the banks are still in an extremely good position to offer integrated banking services and to unlock valuable new customer experiences. And particularly, there's some neobanks that are emerging that are leading in the space as well. And it's very clear that in the UK that banks are adopting a partnership-led approach to reach customers in new ways and take advantages of fintech for certain segments. And really what they're trying to do is combine the fintech tech distribution with the at-scale banking capabilities that they have as incumbents. So, they're starting to do things like machine learning, running algorithms on top of the data that's available from open banking to improve customer experience with tailor-made sort of services that they can deliver at the right time and add value services, upsell, cross-sell, utilize that data to really improve the customer performance. On the payment side, it's really interesting in the UK. So, open banking initiated payments. When I look at the statistics of how that's being used, the bank's the primarily user of it. So, a wallet top-ups or bank-to-bank top-ups account for 53% of all open banking payments in January this year. Repayment of credit cards, which is another open banking enabled payment service, was 30% of all the payments in January. And that compares to other use cases like payments for other goods and services that are non-bank, which was in January only 14%. So you can see that actually in the payment space, as well as in the data space, banks are embracing this as a new way to offer new services to their customers and improve customer experience in the process.
And I understand tax is another important area that is emerging as an area of use case.
Yes, I mean that was one of the early adopters of open banking payments was our own HMRC, the government collecting taxes. They have now introduced that across the board for all of the taxes and we see a significant spike in January when in the UK we all have to pay our self-assessment. It's small in the overall context of those overall payments. It's roughly, well, in January it was 10% of payments. Usually each month it's about 5% of payments, but it is important, and government is obviously a very credible participant when it comes to encouraging the rollout of open banking payments. And actually, having used the service myself, I see how good it is, and HMRC particularly like it, not only for cost, but because they have a building up in Scotland in Cumbernauld where there's thousands of staff employed working out, trying to reconcile where people haven't put their payment reference on their tax payment. Millions of payments fall into that category. That can't happen in an open banking payment. It's all pre-populated. So there are lots of that, as well as the customer experience, there's some real benefits.
Literally making people more open to pay taxes, right? So that's nice. If I take this slightly different angle and Vijay, bring you, in the picture to ask you something from a technology standpoint, right? I mean, look, at the end of the day, we're talking about collaborating with fintechs and we're talking about level playing field, but what's the significance of APIs, right? I mean, that's clearly critical. It has a role to play, and how do you see the role that it serves in this context?
So it's a good question. So going by what Richard and David also said earlier, open banking is about customer consented data sharing. It's about smarter data, right? And it's about putting data to better use than just say like a Facebook selling ads to me that they want to target. But how do you do that, right? So the APIs become the channel to deliver that new experience or that data sharing. And APIs are not new. APIs have been around for for quite a while now. But what is changing significantly, and I have the benefit of being in London, so we worked with the industry through the early days of open banking in Europe as PSD2 and with all the work OBI has done, which has been quite phenomenal. APIs are the channel, and what's been changing recently is the significance and the role APIs are playing in banking modernization. So traditionally, what would happen is a bank would have, every bank has multiple back office products. And if a back office vendor had some API capabilities, bank thinks it's got APIs. But those kind of capabilities are very limited. So what has changed over the past probably few years and initiated by open banking is banks looking at horizontal, organization-wide, very powerful API capabilities, right? And that's becoming bang into the center of every tech conversation because APIs are the channel to deliver it. And there's another issue at hand, right? So in the UK, when open banking went live, almost every bank's projections of volumes of API calls that are going to hit back office systems has been blown through the roof because, and Richard will, OBI publishes statistics every month on their website. But the jump in API calls has been absolutely mad. And what as a bank, what you got to think about is how do you support that API, that call in the backend, right? So back office systems in banks traditionally are not used to being cloud first or API first and 24/7. A lot of systems are still used to batch mode processing, whereas the whole API world is very different. So as a traditional bank, you're going to have an issue of two speeds of IT, and how do you balance the old school of batch mode processing with its onslaught of fintech-led API calls to your back office systems. So APIs are critical, and APIs provide a route to be able to manage all of that very, very well. But I'd say also step back for a second, right? I think if you look beyond open banking, banking is being disrupted in a very, very large scale. Open banking is the tip of the iceberg, and it's a great example of how fintechs are leading that charge. In many cases, leveraging bank infrastructure. But there's much more to this, right? ChatGPT has blown up over the last couple of months, and we're going to see the impact of that in the traditional banking world. I don't know how many banks are ready for all of this. But as a traditional bank, if you look at extending open banking principles into things like banking as a service or embedded finance, again, APIs are they're the root, they're the channel, that's the way you're going to do all of this. So APIs are absolutely critical.
Yeah, the pivotal part. I think I want to, go back to you again, Biju, on this point you're making, right? On the one hand, we see, the API calls going through the roof, and we see, these large horizontal API layout that banks are seeking to have. Yeah. But we also see, banks also getting worried about open banking, from various other angles, right? For example, security and disruption and stuff like that, right? Yeah. So, I know at Fiorano, you've been doing a lot of work around this space. And yeah. So from your standpoint, how do you guys help banks address this, delivering open banking securely and minimizing or with minimal disruption, should I say?
So I think part of the problem is the term open, right? Because I've been in countless meetings where I've had compliance officers say, banking isn't open, banking needs to be secure. I think what people seem to miss is the fact that, like David was mentioning earlier, many consumers all over the world have been using open banking type products for a while now. The big difference is that traditionally, a lot of these products were delivered using screen scraping, which is a very insecure format of data sharing. And it's like, if you look at the US as an example, it's been going on for years. There were thousands of fintechs who have been screen scraping, and customers have very happily or unknowingly provided access to that data or consent and credentials to a fintech to screen scrape. And that is absolutely crazy because you have got institutions who are way less regulated than banks having access to customer account credentials. Right now, open banking, the term is misleading because it's about opening up the banking ecosystem. But open banking is more safer because open banking, to begin with, one of the first things the OBIE and the FCA in the UK did was they enforced a stoppage of screen scraping. And your earlier question was about APIs, but APIs allowed that whole screen scrape format to stop. Right now, I think at this point you should take a step back and also think about the role OBIE has played, which is very, very critical. And I think in many cases, people don't appreciate how central that has been. In many cases, open banking started as PSD2 in Europe. PSD2 wanted a way, they enforced data sharing. They didn't say how it needs to be done, right? So in Europe, we had API specs, and so did OBIE. The big difference that OBIE, I think, delivered was twofold. One is they introduced a centralized trust directory, right? And as a participant, working with banks and fintechs in the country, that trust ecosystem played a very critical role. The second one is the FAPI security profile the OBIE built along with the OpenID Foundation, which essentially adds a customer-related SCA-based consent format into the whole model, which essentially, from a bank standpoint, it means that any data sharing that a bank is doing is done with the right authentication authorization from a customer, and essentially is based on a contract that the customer has consented with his or her bank to share data with the fintech. So that model about FAPI is very critical to, I think, making sure that banks can deliver that securely. And the FAPI security profile, which the OBIE really pioneered, the OpenID Foundation, delivers that very, very well. And again, a lot of the issues are going back to how do banks with legacy systems work, and Fiorano has tech to do that. I mean, the first digital-only licensed bank in the UAE works on Fiorano. Adopting can be, well, you guys have awarded them also. I see them. So adopting open banking can be very complex. It can be expensive, but there are tools like what we have to, help simplify that. But the key last message I have is that as a bank, it's not enough to think about how do you comply. Like complying with a central bank mandate is just part of what you have to do. It's really important for bank strategy team to think about how they're going to leverage open banking. And that really means changing your role from a data publisher to data consumer. That's my take.
That's very insightful, from being a data publisher to data consumer. And I have to say that before OBIE came, because it was a situation of ignorance is bliss, and people were having screen scraping, and they were happily living thereafter. And then we got FAPI, and you talked about being from a data publisher to a consumer, and I know there is a lot of consumption, and NDF, for example, David obviously deals a lot with business banking, institutional customers, right? Now, if I was to ask you, from a integration, for example, of open banking with, let's say, ERP systems, right? I mean, as a use case. I mean, how do you see the benefit literally translating to the customer?
Great benefits, actually. But let me just add one thing to the previous discussion about the roles of the open banking. That is very interesting in my view, because the way in which you look at the entire ecosystem, it could change if we, because we have just mentioned the consumer and who is disposing the API, the data. In the middle, there are third parties that, in my view, they are the ones that are called the prosumer, the one that are building new services. It's like we are creating, open banking is creating a platformification of the banking industry, where you have different kind of roles that are contributing and are using the data, their own data in the bank system. And this, if you look at it like this, you are creating a big TikTok platform where you can use your data. I know I say something a bit strong, Richard, I know, but be with me, because in my view, we have to simplify a bit the way in which we are talking about open banking. Coming back to the consumer, to the different kind of user that can use the data, like, for example, the big corporate. They can have a big kind of benefits in using the open banking, the way in which they access their own data. For example, having enhanced cash management, because the open banking allow the real-time access to your transaction data that and your account data, right? Which can be integrated with your ERP as a customer, corporate customer. So this will automate a lot of activities of cash management that is very useful for the customer. And this enables company to optimize their cash flow, make better informed decision on payments, investment, and funding, for example. All of this, it can improve efficiency because integrating the open banking with ERP, corporate customer can streamline financial processes, reducing the manual error of people that making how you call it, comparing
straight through processing. Yeah,
exactly. Yeah. And this kind of company to save time and reduce costs associated with manual reconciliation is the trend that I didn't have. And
save time, save costs, save time,
absolutely.
save costs, and customer convenience.
Better financial planning because connecting your ERP system to access your financial data with multiple banks, because usually corporate have multiple banks accounts. So if you have a system to reconcile all the data on your bank account, can really simplify the way in which you are reporting the data and providing comprehensive view of company financial position. So it's very important. Overall, I think that integrating for a corporate user through open banking, your data through ERP in your ERP can offer a lot of benefits in terms of visibility, control, and automation of financial process. So it's very important. This is what we are looking now and what is happening in Europe and UK.
Correct. Control and obviously convenience. I think it's interesting that they're not necessarily always said in the same breath, but here you have open banking bringing them together. We talked about, I'm going back to you, Richard, and we talking about a lot of control and convenience and customer experience and how it's beneficial. Let's actually go the antithesis, right? If I was to ask you, Richard, tell me some industries that you think could be disrupted because of open banking, what would your top picks be?
Yeah, so I mean, the economic origins of the regulatory push for open banking were largely focused initially on current account, and I think the rationale for that is that that current account is a good example of where people treat their bank offering as a single bundle of products. So particularly SMEs that use a bank for a current account also take their loans, their savings, their investments, even when they are more expensive than alternative third-party products. And really, the economic theory is that where new rivals can't sort of emulate, or one of the barriers to switching is the cost of re-entering that personal data and going through an application process with a third party when you can get it from your bank. So I think that's fairly unique in the banking industry. But I think another area in which open banking and data sharing more generally is going to be really disruptive is in markets when there's a high degree of price discrimination between the engaged marginal customers who switch very often and the disengaged inframarginal ones who do not switch and who suffer what we've termed in the UK loyalty pricing. It's quite counterintuitive, but it's absolutely true. With my relationship with British Gas or energy supplier or a mobile supplier, the longer I stay with them, the higher they price me. Insurance is another area in which that's very relevant. People are brought in at a very low price and repriced over the course of the relationship. Was very counterintuitive for what you might think of as the loyalty benefit of staying with the company for a very long time.
Cost of loyalty.
Yeah, precisely. So I think it's those industries. So it's the mobile, it's the energy, it's utility type things where that loyalty pricing, I think, is seen most acutely, But I think there are other, on the contrary side, there are other use cases that I think are more problematic. In the UK, we started off with My Data, and one of the things that the government was keen to achieve was interoperability and sharing data between supermarket loyalty schemes. And I think the disbenefit there of an open banking approach is that it creates the ability of some supermarket to free ride on another supermarket's loyalty scheme, and then there's a disincentive to provide these products. So I think you have to think very carefully at the underlying rationale as to whether this is pro-competitive or anti-competitive, and what effect it would have. But wouldn't it be great? I mean, one of the key areas in which I think, so far we've nibbled away a little bit and we're only at the tip of the iceberg. Wouldn't it be great if in time we were able to get data from those big tech companies who have a valuable source of data about our everyday activities, which has a huge value to it. But again, in the spirit of open banking, enabling people to access and harness that data for their own benefit, that would, that long-term aspiration, that would be great.
Data is the new oil, as they say.
Yeah, honestly, I think we at some point we will see it, because quite a few new jurisdictions, as they onboard open banking, are actually now talking about reverse data sharing. So, Richard, you're right. I'd love to see that, because that will change the game massively. And
no, I think
serious pushback also.
Talking about interventions, regulatory interventions, and reverse, data sharing is an example, and I quite like the way you coined, Richard. One person's having best of breed options is another person's disloyalty problem. So I guess we have a interesting two sides to the coin. But since you mentioned about regulation, and if I was to ask you again, Richard, as someone who's actually been advising and driving policy change, what regulatory challenges do you think needs to be addressed if one were to fully realize, quote unquote, the potential of open banking?
Yeah, so I mean that we're struggling with that issue right at the moment, Ram. So we've had this joint regulatory oversight committee formed in the UK to look at the future of open banking, and decide how to ensure that the benefits of open banking are progressed beyond where we are in terms of the CMA order. And it's very clear from the we ran a strategic working group process just at the tail end of last year, and I think the key things from a regulatory perspective are that broadening out to other sectors. So that's a very clear activity where regulatory intervention is going to be needed. In the UK, there's a sort of, the other thing is a levelling up agenda. So at the moment, by the construct of the CMA order and the fact that only 9 of the biggest banks are under that, it provides some challenges. And I think actually what you need to do is extend that out so that there are obligations not only on the rest of the banking community, but also in terms of the TPP community, the fintech community. One of the problems that we've encountered at the moment is that in relation to open banking payments, there's some very low evidence, but some evidence of fraud arising. And to address that fraud, you need data sharing that helps people make informed decisions about risk scoring transactions. And we're in that. I'm very accustomed to it from my background in cards. When you're in a network business, there's not always joint incentives to do things, and there's no incentive for TPPs to invest in data sharing capability when they don't have no certainty about how the banks will use it and whether they use it at all. And the banks on the other side have no incentive to build their risk scoring capability until they know they'll get those data elements from the TPPs. And you kind of need a regulatory framework to ensure that you've got that to achieve what you want, which is a great outcome for the, you know, a really good outcome for the ecosystem as a whole. The other big thing in the UK is obviously the funding of all this, because again, that is residing at the moment with those 9 banks. So how do you, lots of things that are needed to take open banking forward, lots of issues to resolve. A good number of issues to be absolutely resolved if the regulator in the UK's ambition to see open banking payments as a real, genuine alternative to card payments. There are lots of practical things to fix. This is an emerging payment thing, and you know, even refunds and very basic things don't work particularly well. But I guess, you know, the regulatory challenge is to ensure that the ecosystem, which is very divided at the moment with no joint incentives. I mean, you know, on a payment side, banks actually, and again, it goes back to what we've said at the earlier part, you know, there is an incumbent disadvantage. Open banking is intended to bring new competition. Competition in payments, you know, banks will lose revenue from interchange, from cards and so forth as a result. And therefore, there's not always those mutual incentives to ensure this is happening. And I think that's where you need the regulatory push to say, actually, in terms of the vision and the outcome, this is what we want to see. And if you guys, it would be absolutely beneficial if you guys at an industry level can come up with the solutions. They're often much better than regulatory solutions, because regulators don't often understand the market. You sort it, but if you can't, well, I mean, and that's exactly, isn't it, what's happening in Canada with open banking. The trustee's been established there. The industry has been given a chance to come up with a framework.
To come with something,
but with a threat, if it can't, the government will come in and legislate and achieve that through other mechanisms.
There would be no choice but to regulate. But you made a couple of interesting comments there, Richard, and you talked about security and transparency, and particularly about, you know, customer privacy, right? So if I was to ask this question back to you, Biju, and if how can, you know, banks, financial institutions, you know, in this context in the Middle East, ensure that open banking is utilized, let's say, you know, where it is secure, where it is transparent, and where customer privacy is protected?
So there's 2 parts to that question. So one is, when a central bank issues a mandate, how does a bank comply as a data publisher? That is actually pretty straightforward. If you look at the work that OBI has done with OpenID, and which has now been extended to multiple countries. I think right now the most secure spec is probably what Brazil has, because they've added JAR and PALM to the onboarding format. But complying with the regulation is very easy. If you look at the kind of stack we have for digital banking, open banking is a part of it, but it builds in, it incorporates, you know, the most stringent security standards in the world, right? So we comply with all the OpenID specifications, any API specification. Complying is easy. What you need to think about is things like API security. How do you bring in consent, and how do you give control to customers to be able to change consent, as an example, right? How will you protect your APIs using FAPI, right? To make sure that as a bank, every time you issue data outside, you are doing that based on a specific customer consented contract to share data. AI is changing a lot of things, and that's slightly worrying, because the threat vectors we're seeing in banking are being affected. You know, ChatGPT is not just about writing nice content. We are seeing that deep AI impact everywhere, right? So the threat vector is changing. So there's things to think about from that and the standpoint. And again, FAPI protects that, but as an API platform, we've got ways to protect that also. And that's one side of it, right? The other side is the benefit. How do you as a bank leverage open banking? And so you got to think about the business impact and the implementation impact. And one of the big issues we saw in the UK when open banking went live was initially no bank wanted to do it, right? Let's be honest, no big bank. The CMA 9 order was an order because nobody was going to proactively say, okay, let's spend millions of dollars or pounds to share data with our competitors. No bank wanted to do it. I've been in meetings where I've had compliance officers bang their fists on the table and say, we will never share our data. And I said, don't shoot the messenger, because there's a directive by the regulator. But so open banking is going to change a lot of things for banking. It's not just about compliance. You need to think beyond it, of the impact just to implement it and comply. How are you going to work as a business? And from a platform standpoint, like I said, we support digital banking end to end, and open banking is one part of it, and we can support fast compliance. Yeah. Got it.
No, I totally resonate with what you are saying. Ultimately, it's a function of making that change happen in the marketplace. Last words, David, and quick one-line answer. If you were to actually, make a statement on how open banking will evolve in the next 5 to 10 years in the Middle East, and based on your answer, I'm going to actually then have some questions come up from the audience that we'll be going into quickly. But if you had to give me a one-line answer, what would that be?
One-line answer? No, I don't have a scribe, but to be honest,
okay.
In my view, the future of open banking is look promising in the Middle East, in the region, because several countries are in the region showing interest, stepping with regulation like Saudi Arabia, like Bahrain, and others are following because they are showing a lot of interest. Just for mentioning you that the central bank UAE issued a few days ago a kind of a financial infrastructure transformational program to accelerate digitalization in the financial service sector. And the number 4 initiative is regarding open finance. That says driving innovation and competitiveness, as well as collaboration in financial services sector through their interconnectivity and interoperability among all players and institutions. So this is telling you a lot about the next 10 years in the region about the open banking.
Interconnectivity and interoperability, name of the game, right? Well, we have a number of questions from the audience, and I do want to make sure that we have them answered. But before we jump into audience questions, by the way, those who are listening in here, please put in your questions on the Q&A button that is down there, and we will do our best to make sure that we have these posed to our panelists. But before we get into that, I wanted to request Biju. I mean, I know it'll be nice for you to actually give us some perspective from Fiorano's standpoint on all that we spoke today. Yeah. So, Nikhil, if you can get the deck up, please.
Will do. And I know we're kind of running out of time, so I'm going to rush through some of these, but at least the key message is simple, right?
Yeah, go ahead, Nikhil.
If you go to the next slide, please. So what we've got here are considerations, right? And these are things that we have seen with experience, and things that banks should be thinking about when you think open banking. So, the first part of it is, yeah, you're going to comply, but let's leave the tech aside for one moment. Think about your business, how it's going to change, right? So what's the impact on competition, right? So traditionally banks saw other banks as competition. That's changed, right? So there are fintechs who are agile, fast, and well-funded, by the way, who are competing for your market. And the data you share is going to enable that ecosystem. Big tech is in it in a big way. And, Apple is a great example, right? When Apple Pay first came in, no one thought too much about it because it was just a function of adding your credit card to everything. But today, Apple has got credit cards. Apple has recently launched their buy now, pay later service. Apple has bank accounts. Big tech is clearly in this game, and they are far ahead of most banks, not all banks, most banks. So you need to think of things definitely from a competition standpoint, right? How are you going to adapt to this, and who do you think is your competition? Because in many cases, banks, don't necessarily think of a big tech as the competition, but that is changing. You got to think about the role that artificial intelligence and machine learning is going to play in this space. And decentralized finance is not new. There's billions going there already. Digital currencies are absolutely everywhere, right? It's still early days, but that's happening. Blockchain is affecting banking. So I think you need to step back and look at how your competitive landscape is going to change as a whole. And then you've got to think about what's your role going to be, right? Are you just going to comply with the directive? And just going back to David's point, so David's right. The CBUAE launched, mentioned open finance as one of the key initiatives in February. But they mentioned open finance, not open banking, which means straight away you're thinking beyond just current/savings accounts, right? It is going to extend into multiple other areas like insurance. So what's going to be your model of open banking? Are you going to be a bank that just complies and sends out data? Or are you going to compete? Are you going to be a data consumer? If you are a data consumer, what's the format? Are you going to create a fintech competing proposition? Are you going to leverage banking as a service? Are you going to let other fintechs collaborate with them, let them use your licenses to offer better products and make money off that? Are you going to use other third-party channels? Remember, banking 20 years ago was exclusively controlled by banks, right? You banked in a branch, then we had ATMs, then we had mobile. Until recently, banking happened exclusively within bank-controlled mobile apps. That's gone. Right? Now, consumers will bank where they want to, right? It could be WhatsApp. It could be anywhere. Now, it's up to you to decide if you want to engage in those channels or not. And those are very hard conversations. What I've also got on the screen right now are examples of B2C and B2B products that banks are already working on, and the banks should in the Middle East should be thinking about creating when they think about how to adapt their business model, right? So I don't want to go through the whole list right now, but I think the CEDA team will be sharing this after the slides, after the event. But there's huge impact. Can you go to the next slide, please? Quickly, right? Implementation. Again, you need to think about monetization, right? How do you comply? There are multiple technical elements to this. Are you going to just do open banking? Will you extend to open finance? I've listed here B2C and B2B use cases in insurance, which I think is a great example of the first extension of what open banking will change into. Again, based on time, I don't want to spend too much time on these because it'll take time. But as a tech platform, we support all of these, right? We support fast compliance. But there's a lot to think about. Nikhil, could you go to the next slide, please? We very early on spoke about broad-based API architectures in banking. APIs have been around for a long time. Traditionally, any bank has been limited by the capabilities of single vendor products. If your core banking vendor gave you APIs, you could do a few things based on what they could do. Right now, because of the change driven by open banking, banks are implementing technology architectures that are broad-based across the bank. And very clearly, you have internal layers for atomic APIs, system APIs, and external layers, which will help you go into third-party channels, such as, like I said, we've got WhatsApp right up there, open APIs. But you need to be thinking about technology architecture as a whole. And this is something that we've been doing for many, many years. We've got lots of customers across the Middle East and North America region. We've done this very successfully for. The last slide I probably want to leave you with is an overview of our open banking capability stack. Right, so there's part of this is around open banking compliance from an integration standpoint, and how do you publish open APIs, and how do you bring in identity and consent and FAPI security into the ecosystem. But a lot of these are around monetization. Right, think about how will you be a data consumer? Can I consume APIs from a different country to offer a customer a better proposition? How do I offer a better personal financial management? Can I make money out of trade finance, right? So banks don't make money of B2C in most cases, but from a B2B standpoint, trade finance is very, very powerful, right? It's a very key part of every bank's normal transactions, and you make money there. Now, when you start overlapping trade APIs with open banking, it changes a lot of things and from a capability offering standpoint. So there's a lot to think about. Again, there's quite a few details on the screen, but I think it'll be best for you send
this out.
That's
a lot of stuff to consume there. While Nikhil is closing the deck, I have some related questions on what was presented here. And there's a very interesting question from Vishal Gobil. And I'll take this question to you, Biju, because it's related to this beautiful architecture you said. So the question is, will open banking cannibalize the internet and mobile banking channels of a bank as a customer will be moving to more personalized products and service providers?
Open banking will change it. I wouldn't say cannibalize, it's a very strong word. open banking will change the way those channels are used. Right, you'll see open banking. So look at it. I mean, if you look at PFM with open banking integrated, you don't realize which part is open banking, right? So it's not going to cannibalize. It'll change though, and in a very, very positive way for consumers.
Lovely. Thank you. And I have this, again, this question is talking about governance, and I'll take this to you, Richard. This question is from Abhishek Ashish. And the question is, the more data being shared between banks and fintechs, the more risk there is the data could fall in the wrong hands. Who's responsible now? Is it the bank or the fintech? And how do you prevent frauds in open banking?
Well, I think as we discussed earlier, again, I agree that open banking may not have been the best term for this, because there is, this is built on a trust framework that's fairly secure. And the great thing is that so far in all of the years, we've not seen instance of this at all. But actually, that doesn't mean that we shouldn't be complacent, and there needs, and part of the supervision by regulators of the fintech community needs to be focused on their ability to maintain the integrity of that data. I mean, I come from a cards world. We've seen lots of data breaches by very big and significant companies all over the place. That is likely to happen. But there's a framework, certainly in the UK, with the Information Commissioner and so forth, that addresses the approach to ensuring that doesn't happen, and ensuring that consumers do have right to recourse in the event that something happens that causes them to a loss. So those things, I think, will need to emerge.
I have another question. In fact, two questions here, and I'll take this to you, David. You talked about the ERPs and how corporate banking customers are likely to benefit. The question one, this is from Chengiz Kayani, and there are two questions. Firstly, is open banking successful for corporate banking customers? And two, what are the challenges of consent management when it comes to corporate banking customers?
So the first question is if the corporate and SMEs, corporate kind of user, are happy on this, right? If understood well. There's in the last report that that by the way, the entities that reach as represent open banking implementation entity, they make a very interesting report about how the market is reacting to the open banking, and they are displaying that the SME is part of the user in the market. They are reacting. They are very open to use open banking because of the control that they have with the data and the automation that they can provide, they can have with accessing their own data in different kind of banks. So the feedbacks are very positive in that sense. And the second question was?
Consent management, yeah.
The consent management is part of the regulation framework. Richard here can teach everyone.
I get it.
The framework regulation is part of the fact in the way in which you are providing the service, part of the kind of cascading chain. You have to collect the consent from the user.
If I can add a point there, right? If I can just plug, and so I think the question was also about corporate consent management, right? And it's much more complex. It's good because in a B2C standpoint, you have a single user, single account, or single user, multiple accounts. So consent is for a individual's account for a certain period of time, right? The moment you talk about corporate business, then there's a hierarchy of approvals based on amounts, and that changes a whole bunch of complexity around it. So one thing a lot of people do not realize is, so we spoke about APIs extensively. APIs are absolutely critical, and that's a channel for open banking. But a big part of the problem of adopting open banking is identity management and users. And this is linking into the global, everything you're hearing about, centralized identity and how do you trust who they say you are, which is where I think Web3 will play a role very soon. But there are, it's more complex. You're absolutely right. We've dealt with it, so I think the best thing would be to take it offline. But there is a hierarchy of content which is linked back to any type of corporate approval, right? Which is going to be based on the amounts and who is going to. So there are ways to fix it. We have done this before. So I suggest, I don't know who asked a question, but please do feel free to reach out to me or my team. Happy to talk about that.
That's thank you for that, Biju. I know we're running out of time, but there's one compelling question I'm going to pose to Richard, and we'll conclude with this. Look, I mean, if in a model without a central entity, and this question is from Ashraf Ghanam, where there is no, if there is without a central entity for licensing PI, PSP, and AI PSPs, and be responsible for monitoring and enforcing regulations, for the success of open banking, is it possible to leave this responsibility for the bank and TPP to agree amongst themselves?
Well, it certainly is possible. So we see that as the kind of US model, and that, other countries, South Africa and so forth, are adopting that model too. All of the evidence, I would say, though, suggests that actually that means that the pace of this is much slower. So I think the model used in the UK is probably the most aggressive regulatory model, not only compelling the top 9 incumbent banks to do it, but actually quite a rigorous monitoring regime on top of that to ensure that conformance and consistency, and as a result, I think comparatively, certainly I'm told by very big TPPs, it's much easier to operate in the UK than even it is, say, in France, because we've got that consistency and conformance, and it's not perfect by any means, but it's comparably much better than anywhere else in the world. And when I talk to the likes of Plaid, they complain about the fact that bringing something to market in the US takes years and years, because as we said before, there is limited incentives for incumbents to share data, and the terms on which they want to do that might be reasonably restrictive and not enable commercially the TPP to operate in that market. So I think you have that choice to see how the market could evolve this, but I think in most jurisdictions, regulators kind of realize that enable this to deploy as quickly as they want it, you probably need some regulatory regulatory input and push.
Thank you. Those were very important words, Richard, and unfortunately we've run well out of our time. And I do see a lot of people still on the call, so it just goes to say how critical and well received this panel and the insights of this discussion has been. So thank you again, gentlemen. Really appreciate your time and your very insightful inputs. And thank you, audience, who've been listening through this and also posing some very tough questions, if I may say, to our panelists. And hopefully they lived up to your expectations. Have a wonderful day, gentlemen.